Hello and welcome to Bharat Bulls, where we show you how you need to think to be in the top 1% of traders. It's been a while since I last recorded a video update for you guys, so I thought what I can do is go through some index charts and discuss what the structures look like, where I am looking for in terms of opportunities now that the market has made some sort of a move since the tariff news came out in April. So we'll start with the Nifty 500 first. I have some pivots marked over here from the down move that happened since October last year. So I also had some range markings before that. Just wanted to show how these things play out in hindsight. So if you have a look, there were some other major pivots along the way that we have now crossed. So I've removed them. So this was one of them. This was another one. But if you look, this one pretty much coincides with the low of this range. Um, this is just a classic example of how supports turn into resistances and resistances turn into supports once the market breaches those key levels. So every time, once the market breached this particular pivot, every time the market tried to stage a comeback, it faced some sort of rejection over here. But this is when Trump announced that there will be a 3 month tariff ban, and that's when the market rallied and it had some news flow trigger. That's why it was easily able to breach this level. But again, it tended to find support along this region as well. Now again, if we are looking at current times, I can remove these markings. This is one key pivot that we've also crossed, and I believe now this is going to be a zone where we spend some time, and this is where what leaders will also do is look to consolidate their earnings. Short-term players will be thrown out of their positions who are entering now, and those who should have been active in this part of the market. Some laggards will now start setting up, and I'll talk about those as well in a bit. But this is where I feel the market can spend some time over the next couple of weeks, and then eventually it can start moving higher. Or if we might have a small pullback to 50 DMA or the 200 DMA, but let's see how that plays out. So that's the structure of Nifty 500. The broader market recovery is starting to look good. If you can see the relative strength against Nifty 50, we are seeing some sort of an improvement in the broader market, which is also a healthy sign. This is all sign of a sustained trend that lasts several months and not weeks. So um, stay in the market. Try not to be cute with your entries and exits. So if you've been lucky enough to catch this entire trend, then stay with your original positions. Keep the position sizing in check as well, because this is not the time to be committing a lot of fresh money. We do remain in a structure of higher high, higher low, but there are resistances along the way. I will not be fully. I'm not fully invested right now, but it's better to be prudent than to be sorry in the later stages. Now coming to the star of the market these days, it's Bank Nifty. Beautiful relative strength. I look at this almost for any stock I'm analyzing or any index for that matter. This suggests that this is where the money is in the market. This is where people are um, raking in profits. If you look at the index as it is, it's not doing much. It's not moved much since the start of this year. It's up around 17-18%, but specifically in the last couple of months where there has been tremendous amount of volatility, it only faced a drawdown of about 5%. This is an incredibly tight range for an index with so much going on around in the world. And once, even if when it has broken out, the pullback was very shallow, and now it's trying to move up slowly but steadily. So it's going to frustrate a lot of index option players, futures players, and that's where we don't advocate trading in those instruments or putting your money over there. It's just not worth your time. It's better to be invested in quality stocks that are also giving similar relative strengths, are above 50 and 200 DMAs, have confirmed higher high, higher low structures. Again, let's go on to Nifty. I made these pivots very evident in my update on X. I was alerting about these pivots when the Israel and Iran war was going on. So these pivots have not been breached, so these become very key levels for me to watch out. As long as we are above these levels, we should be seeing a healthy trend. Any pullback is just a short-term fading of momentum, and we should be resuming our uptrend soon after that. Coming to PSU banks, again, this RS line pretty much sums it all up. It's been pretty much flat throughout the year for the last 6 months, and again, you can clearly see the difference in the outperformance when RS is rising. This is what happens in the market. When RS is flat, this is what is happening in the market. There's a reason why I keep mentioning it again and again. It's nothing fancy. It's super simple. I can even show you the code. It's just a ratio between the security against Nifty, and it tells me everything I need to know. If the RS line is trending up, I should be focusing on it, and else it's just not worth my time. We have the commodities index again, higher high, higher low structure. Good to see. The golden cross happened a couple of days ago as well, which is good. But in terms of RS, very poor. I don't find it to be optimal, and I can show you some optimal RS lines in a few minutes as well. The MNC index again, nothing here to be proud of. Even the 50 DMA is still below the 200-day DMA despite the up move. Now, pharma is something that has been very interesting to me because I'm seeing the stage formation at right at 50 DMA. The RS line is poor, but what I'm seeing here is the contractions. If you closely notice, every time the price tries to stage a pullback, the price has not gone and breached the previous levels, barring this one day. And the contractions have been super shallow, which is really encouraging me to be a part of this sector and try to play it out. I will not be participating in any stocks. Probably ETFs are a good route for that. So yeah, I definitely have this on my radar. Once this range breaks, the price should move smoothly on the upside. We have the mid cap index next. Excellent in terms of the recovery that has staged since March and April. 50 DMA is comfortably over 200-day DMA. We are in a confirmed higher low structure. This is incredibly positive for the market because this shows that money is not just flowing to the large cap names now. Mid cap and small cap are also attracting it. So the small cap again has a very similar structure. The golden cross is now happening in small cap, and mid cap already had that a couple of days ago. So which shows that mid caps were in more priority before small caps were. Next, we have the IT sector again setting up very well. We do have some sort of a head and shoulder pattern here in play. This was the pivot I was very keen on watching because this was a key level I was looking at how it crosses it. It's been well. It's not too great, but the RS line will tell you that I'm not particularly focusing on this sector. It will again be in sync with what Nifty does, but it will not be a rank outperformer. Media sector is again something which is I tend not to look at this sector. It's too much noise around this. Not a favorable sector for me, so I tend to stick out. This is another index for dividend opportunities. I just have it on my watch list because I like to see how the longer term players are participating. Again, this has been in a poor structure since September last year. Nothing to be worried about over here. We're not missing out anything over here. PSC sector was a leader in the last cycle, and the RS cycle, the RS line shows that why. Since last year again, it's not been performing well, and the price has reflected the same. We are seeing in a higher low structure, but that's because the broader market is now starting to make a move. I can mark some pivots over here. I see these is a key level. We have some major pivots over here and here. So unless these are taken out comfortably with a wide ranged candle, I will not be looking at this. Energy is doing nothing fancy. 50 DMA is below the 200-day DMA. Nifty 200 will be again in a good structure because these are large cap names. Consumption sector is now comfortably above this pivot, which is a good sign. I think this is also some sort of an inverse head and shoulders. If I can plot it out, yeah. I don't know how I missed this, but this looks good. Similar to IT. I just have it on my index watch list because I like to see what the broader market themes, broader market themes are emerging. Sorry for that. Nifty 100 is going to be pretty much a flat RS line, close to 1 because it's measuring the ratio against Nifty. Realty is forming a flag and pole. Now this is trying to stage some sort of a pullback right now. There's good risk reward and offer, but again, this is a lagging sector. It was not moving till May and June. Only about since last month is when this rally played out. So I'm keen on seeing how this performs. We can test out 200 DMA in the short term, and then let's see where this goes. We have the services index, which is doing really well. And this is now again one of the leaders in this cycle. So look at the companies in this sector because I missed on this sector entirely, but it's not too late because it just broke out on Friday or Thursday, and we can expect some pullback right about the all-time high region. Infra is something which has been on my radar for a while now because it moved above 200-day. The 50 DMA line moved above 200-day DMA line way back in June, early June, which is a good sign. The RS line is improving slowly. There are key levels to watch out for, which I've marked, and we're taking some resistance. There's also this gap which might prove as a resistance. But yeah, again, this sector lagged compared to Bank Nifty and Nifty Finance. So I'll not be like keeping this on top of my list, but it's definitely up there. Nifty Metal is something I'm very excited about because this is an under-owned sector right now, and this is where people tend to overlook. There's a lot of resistances on the chart, and this was the first pivot that was crossed. We had some shallow pullback after that, and now 50 DMA has crossed over 200 DMA. Again, we are seeing these resistance come in from these prior pivots, nothing to be surprised of, but there are stocks in this sector that have already broken the all-time high range, and I've posted a couple of charts on them yesterday as well, so do check them out on my X profile. FNPG is doing nothing to be worried about here, and auto index is again trying to stage some sort of a breakout over here. A lot of names in this sector are breaking out, but those are mostly from the auto parts space and not the auto space. Some of them are moving, but then again, this is still setting up, nothing to be worried about. This is Nifty Finance, again a rank outperformer. The RS line speaks for itself, having some sort of a pullback. So every dip in this sector is now an opportunity to buy more. A Nifty Private Bank compared to PSU banks, you can see this is the RS line for Nifty Private Bank, and this is the RS line for Nifty PSU Bank. You can clearly see which of these pockets is taking the market higher. So yeah, I think that pretty much sums up in terms of preference. My preference will stick with banks, finance, infra, metal, and realty. Those are the names I'm looking at. Nifty services as well, because that just I hadn't seen the chart in a while, and I'm just seeing this. So in terms of opportunities, I'll be looking for stocks within these pockets. So take care, and let me know if you have any doubts in the comments. I'll be happy to answer them. Take care and have a good day. Jai Hind.